93%. Let that sink in for a second. Because we're not talking about a rounding error. We're talking about nearly every single business owner in America silently handing extra money to the IRS like it's a tip they didn't agree to leave. Forbes didn't stumble onto a conspiracy theory. They did the research. They ran the numbers. And what they found should genuinely make you set down whatever you're holding right now. The wild part isn't that taxes are complicated. It's that most business owners already have an accountant, already feel covered, and are still losing money, like there's a slow leak they can't see or hear. Here's the brutal irony. You hired a professional specifically so this wouldn't happen to you, and statistically, it's still happening to you, which means the problem isn't the accountant, it's the assumption about what an accountant actually does. Think of your accountant like a doctor who only treats symptoms they file accurately based on what you hand them, but they're not necessarily hunting for the underlying condition that's quietly draining your wealth. Tax planning and tax filing are two completely different disciplines, and conflating them is costing business owners on average thousands, sometimes tens of thousands of dollars per year that they never see again. The behavioral economics piece here is fascinating and a little uncomfortable. Most business owners feel a psychological sense of safety once they've outsourced the task, which is exactly when the blind spots multiply. We've seen this pattern before in personal finance, in real estate, in investing. The moment someone believes the system is handling it, they stop asking the hard questions that would actually protect them. Historically, the businesses that retain the most wealth aren't necessarily the highest revenue. They're the ones with owners who treat tax strategy like a quarterly board meeting, not a once-a-year scramble in April. The misconception we need to destroy right now is that aggressive tax strategy means something shady. Legitimate deductions, proper entity structuring, and timing strategy are entirely legal and entirely underutilized. What you can do practically starting this week is request a proactive tax planning conversation, not a filing review, but a forward-looking strategy session where someone is actually modeling your next 12 months. Discipline here looks like documentation, quarterly check-ins, and treating your tax position with the same seriousness you give your sales numbers, because one of those conversations is already happening and the other one probably isn't. At the end of the day, the businesses that win long-term aren't always the most innovative or the most aggressive. They're the ones who plug the quiet leaks while everyone else was focused on growth. You can have the best revenue year of your life and still end up behind because of what you didn't plan for. And that's not a tax problem. That's a strategy problem with a tax-shaped hole in it. If any of this hit close to home and you're ready to stop being part of that 93%, check out our links in the description below, whether you're looking for real estate investing guidance, home contracting work, or connecting with lenders. We're here to help you get started.